So what are you going long on? What are you shorting right now?
I don't think our sectoral narratives have changed over the last couple of months. We still continue to be long private banks, telecommunications, as we discussed in the past, some insurance companies, some select domestic pharmaceutical companies. So the narrative of what we are long on hasn't really changed in the last couple of months.
And has this sort of not fluctuation, but the sell-off that we saw yesterday, and has that changed your view at all in terms of how aggressively you want to be in the market right now, even with these calls?
So basically, we are a long-short equity fund, and to that extent, our first dharma is really to protect the downside of the portfolio. So when an event risk that takes place like this, what we would do is that we would reduce our equity exposure in those kinds until greater clarity comes. I don't think we have any special insights on how this coronavirus issue will evolve. And of course the market has been believing that this is a one-quarter phenomena, and the next quarter there will be a V-shaped, at least a recovery from there on. I think they were jolted a little bit because they saw that this virus epidemic has spread to the developed markets. So there has been a sort of a reassessment as to, is this a more durable kind of a phenomenon? Like I said, we don't really bring any insight into the table whether this is how it will pan out, but we will allow the situation to evolve, get more news flow on the coronavirus issue before we take a more constructive stance. But the only thing I could tell you is that the liquidity in the global markets is so high. In fact, it's at a record level. And of course, the domestic liquidity also towards equity is extremely high. If this coronavirus issue were to sort out, I think we are headed towards new highs again.
Okay, so then what's going to move up to those new highs? Because, before the coronavirus issue became very big, we were also grappling in the second quarter, with the numbers. We were grappling with private sector banks and different issues coming up, account-specific issues coming up here and there, and whether there will be maybe a second wave of NPAs, maybe mid-sized corporate NPAs.
Sure.
What's your take on financials?
So financials, there is clearly, we are selective on what banks or private banks that we have backed. And one of the key things that we look for is lending DNA. And that's we are extremely careful about. So there are certain banks that we think have the lending DNA, which will help us hold them over a multi-year period.
Everybody's got the lending DNA, the right lending DNA.
Yeah, absolutely right. The right lending DNA. And that's an extremely important aspect of the lending business.
Right.
And I think it's a rare, disciplined lending DNA, as we are finding out in the Indian market. So when you have a disciplined lender, and also the other part, which is, a strong CASA, we are again seeing that it's not a very easy thing to build, a good CASA ratio and a lending DNA. That's a very rare combination that's you get to in India. We have seen some banks which have tried to grow aggressively and then subsequently build a CASA, which again becomes a bit of an issue. Or there are some banks which are growing slowly, but then they're having challenges building the CASA. So, I think that combination, if you have good CASA, low-cost deposits, and you have a good lending DNA, I think in banking, private banking is a very good business to hold on for the next 3, 5, or 10 years.
Yeah, one thing I haven't understood is that these days everybody wants to be a retail lender and everybody wants to build a great CASA franchise.
Sure.
If it were that simple, I could be a banker as well. I could run a bank, but that's on the lighter side. Yes. Another sector that you like within financials is insurance.
Right.
Now, what part of the piece, and because valuations have started getting perhaps lofty here as well. So how are you cutting it?
So yes, again, the type of businesses we like are, at least on the long side, are something that has a longer duration of growth. And we think that insurance companies, general as well as life, have a longer duration of growth. We are fairly excited about the general insurance company that we own, which again also qualifies for the lending DNA or the underwriting DNA, so as to say. And they've been extremely disciplined in getting out of businesses where they think they're not going to make an underwriting profit. And that's again something that we like. So we think, clearly that for private general insurers.
But not life, essentially non-life is where the focus is.
No, we have exposure to both.
Both.
Okay. But what I'm saying is that even in the life insurance, I think there is an opportunity for the life insurance companies to improve their product mix and where the margins are a little higher. And there are companies which have a good low-cost operation with an with an ability to scale up, their business through the branch network. So again, that's an area that we are fairly encouraged by. So again, this we think are good longer-term opportunities.
You mentioned telecom as well, and there are two. I mean, there's Reliance as a play, and there's Bharti, pure play. Would you buy Bharti? It's come off a little bit.
So I don't know whether we should comment on stock-specific issues, but I think that our thesis on the telecommunication business is that the economics have to improve on a multi-year basis. One of the players is already on record to say that the 140 rupees ARPU is inadequate, as we speak, and it'll have to move to a 200 rupee ARPU to make it a viable business, and a 300 rupees ARPU to make a 15% return on capital employed. I think we'll have to see how the other players' economics kind of works out, but I think it's inevitable that over a period of time, ARPU's average revenue per user have to move up, which should improve the economics of the the players in the industry. So we are, again, from a multi-year perspective, we think the telecommunication business can hold a lot of promise. We want to add that apart from the improvement in the telecommunication business, I think the moats of the future are really networks. And in India, I think one of the ways that you can build a moat is through the telecommunication business. There are application layers that you can build on top of the infrastructure services that you plan to have. One of the telecommunications operators is already planning to do that, and we'll have to see how that evolves. But it could be encouraging if they are able to build a certain moat around the applications that they build on top of the infrastructure services, which could make it an attractive long-term story as well.
Okay.
No, I think, I don't know if we have time, but if we do, I want to just address the last sector that you mentioned, domestic pharma, right?
Sure.
Which is not exposed to US, essentially
that
exposed to the local market here.
That is correct. A dominant portion of their profits come from the domestic side, and they are brands in the consumer markets in India, and they can have a growth trajectory which is reasonably attractive. So again, that's a sector that we are fairly excited.
So all very local focused.
Local focused. Let me add that I also like IT, and I think it's a little underestimated. IT provides a very good balance to the entire portfolio. I think there are some IT services companies which have taken a lot of investments through the P&L, which are investments in the digital services. And as you move forward, it's possible that with the scale that they get, they can improve their margins as well. So apart from gaining market share in the global markets, which Indian IT services are doing, there is an opportunity for them to improve margins as well. And the valuations in this space are not exactly demanding, because people are always worried whether, with US where it is, that whether that's peaking off, and then that can impact demand for IT services. But I think that the valuations and dividend yields for some of these companies are fairly attractive. And given the composition of the nature of businesses and margins, I think there can be an attractive thesis as well.